Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with a lot of risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. And while you're there, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. The restaurant industry took a massive hit during the 2020 health crisis. Not all restaurant stocks are created equal. Some have performed better than the others since 2020. And the outlook for restaurant stock, Fat Brands Inc., traded on Nasdaq under symbol FAT, looks even better. John?
Yeah, thanks, Mo. Admittedly, it's an odd name for a restaurant stock, but FAT actually stands for fresh, authentic, tasty. You may not know Fat Brands by name, but chances are you know its growing portfolio. It currently owns 18 restaurants, brands at least including Fat Burger, Hurricane Grill and Wings, Ponderosa, Twin Peaks, and most recently Smoky Bones. It actually has more than 2,300 franchise locations worldwide. Now, a little bit of quick background. During the 2020 and 2021 health crisis, while restaurant stocks were shuttering their doors and running for cover, Fat Brands was actually expanding its empire. And I'll just throw out a few numbers. In September 2020, Fat Brands completed a $25 million acquisition of Johnny Rockets. In July 2021, it bought Global Franchise Group for $442.5 million. And that's the name behind Round Table Pizza, Great American Cookies, Hot Dog on a Stick, Marble Slab Creamery. A few months later in October, it completed the $300 million acquisition of Twin Peaks restaurant chains. And in December 2021, Fat Brands completed the acquisition of Fazoli's and Native Grill and Wings. Now, that $130 million acquisition marked the company's first foray into the Italian quick service dining category. Fast forward to September 2023, and Fat Brands announced that it acquired Smoky Bones Bar and Fire Grill for roughly $30 million. This marks Fat Brands' first foray into barbecue. Now, the purchase is expected to increase annual adjusted EBITDA by approximately, $10 million and bring 61 new corporate locations under the Fat Brands umbrella.
John, I know some restaurants are still struggling. How did Fat Brands do in the most recent quarter?
Again, because of its great diversified portfolio, it continues to do well. For the third quarter ended September, Fat Brands announced that total revenue increased 6%. to just over 109 million. Royalty revenue increased less than 1% to roughly 24 million, while system-wide sales were up around 1% at 564.5 million. Now, during the quarter, Fat Brands opened 30 new restaurants, and year to date, it opened 96 restaurants, and it is actually on track to open 150 new restaurants in total in 2023. For the first 9 months of fiscal 2023, Fat Brands announced that revenue advanced 6% year over year. Royalty revenue climbed roughly 6% as well, and system-wide sales inched up around 3.5%. Going forward, management said it is seeing strong franchise interest in development opportunities, having signed over 200 development agreements in 2023. That brings its total pipeline to over 1,100 units. This represents potential for over, which is significant, 50% EBITDA growth over the next several years.
Now, with financials out of the way, could you talk a little bit more about what's happening with dividends and FAT stock price?
Yeah, absolutely. Some restaurant stocks are stagnant, but Fat Brands is reporting strong growth and is rewarding investors with a growing high-yield dividend. In August 2022, it increased its quarterly payout to 14 cents per share from 13 cents per share, and it's held its quarterly distribution at that level. This works out to an annual payout of 56 cents per share for an annual yield of 9.72%, and that's well in excess of the current inflation rate of 3.7%. Now, in addition to a reliable high-yield dividend payout, Fat stock also has been doing well in 2023. As of this recording, up roughly 13% over the last 6 months and 28% year over year. In addition to a reliable high-yield dividend payout, Fat stock has also been doing quite well in 2023, up 13% over the last 6 months and up around 28% year to date. Now, over the same time frame, the S&P is actually down 0.5% over the last 6 months and is up 8% since the start of the year. If conservative Wall Street is to believe, bigger gains are coming. Now, as of this recording, FATS is currently trading at around $6.15 per share. And the median 12-month share price target for FATS brands, according to Wall Street, is $20, with a high estimate of $26.
John, thank you so much for your analysis. Just to recap, Fat Brand is a great restaurant stock that has rebounded since depth of 2020 health crisis, rising more than 750%, and those big gains are justified. Since late 2020, Fat Brands has closed on 6 strategic acquisition. It opened 142 new locations in 2022 and expects to open 150 more in 2023. The new additions to its portfolio is helping the company report strong revenue growth. Despite the raft of recent acquisition, management believes there are still significant opportunities on the horizon, which will allow it to integrate new brands and maintain a healthy, evolving pipeline for organic growth. These trends should position Fat Brands Inc. for continued growth, which should help propel its share price and allow its high-yield dividend payout even further. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.